When buying or selling a property around the world, what kind of taxes are involved, and why is Dubai considered one of the most competitive and attractive real estate markets globally from a tax perspective? Even a small difference in taxes can have a big effect on how much profit you make from a real estate investment. That is why it's so important to compare the property taxes in different countries before choosing where to invest. In this talk, I will explain about how property taxes work in 7 countries: the United States, Canada, Germany, the United Kingdom, Turkey, Spain, and the United Arab Emirates. We will look at the taxes you might face when buying, owning, renting, or selling property. And at the end, we will see why Dubai is considered one of the best places in the world for real estate investors when it comes to taxes. Let's start with Dubai. What makes it special is how simple and investor-friendly the system is. There is no annual property tax, no capital gain tax when you sell your property, and no inheritance tax in Dubai. The only main cost is the Dubai Land Apartment Transfer Fee, which is a fixed 4% of the property sale price. This fee is usually split equally between the seller and the buyer, mostly paid by the buyer, unless the buyer and the seller agree otherwise. There's also no rental income tax in most cases. However, if the property is used for a business or the owner is registered for VAT and renting the property as a part of a business, then 5% value added tax VAT is added to the rent. Usually the tenant pays this tax to the landlord and landlord pays to the authorities. Now let's talk about the United States. Property tax there is paid every year and usually ranges between 0.27% and 2.4% of the property's value, depending on the state. The national average in the US is about 1.1%. If you sell a property after holding it for more than a year, you may need to pay capital gain tax of up to 20% depending on your income. When ownership is transferred, there may also be a transfer tax which varies from 0.1 to 2.2%. Rental income is taxed at both federal and state levels with higher taxes for higher income. If someone passes away and their estate is worth more than $13.6 million, the inheritance tax can go up to 40%. For foreign investors, only the first $60,000 of US property is exempt from this tax. In Canada, yearly property taxes are between 0.5 and 2.5% depending on the province. If you make a profit from selling the property, 66.67% of the gain is taxed for profits over 250,000 Canadian dollars starting mid-2024. Property transfer taxes also vary but usually fall between 0.5 and 2%. Rental income is taxed based on how much you earn and how many expenses can be deducted. Canada does not have an inheritance tax, but when someone dies, their property is treated as if it were sold and any profit is taxed. In Germany, annual property tax is between 0.2 and 1% depending on the town or the city. If you sell a property within 10 years, you have to pay capital gain tax. But if you have owned it for more than 10 years, you don't pay any tax on the profit. Transfer tax ranges from 3.5 to 6.5% depending on the region. Rental income is taxed at passive rates going up to 45% for higher earners. Inheritance tax in Germany starts at 7% and can reach 50% based on the value of the property and your relationship with the person who passed away. In the United Kingdom, property owners pay council tax every year, usually between £1,000 and £3,000. When you sell a property, the capital gain tax is 18% for lower income people and 24% for higher earners, which was reduced from 28% in 2024. The transfer tax, called stamp duty in the UK, is between 0 and 12%. Properties under £250,000 are tax-free, and the first-time buyers get even more exemption, up to £425,000. Rental income in the UK is taxed at 20%, 40%, or 45%, depending on your rental income. If someone passes away and their estate is worth more than £325,000, a 40% inheritance tax may apply. In Turkey, the annual tax on residential properties is 0.1% or 0.2% in big cities. If you sell a property within 5 years, you will pay capital gain tax. But if you keep the property longer, the profit is tax-free. The transfer tax is a flat 4% of the sale price in Turkey, usually shared between the buyer and the seller. Rental income is taxed at 15% to 40%, depending on income. Inheritance tax starts at 1% and can go up to 30% based on how much is inherited and who receives it. In Spain, the annual property tax ranges from 0.4 to 1.1%, depending on the region. Capital gains tax for residents goes from 19% to 28%, and non-EU residents pay a flat 19%. When buying a resale property, transfer tax is 6 to 10%. New properties are taxed 10% VAT, plus a stamp duty of 0.5 to 1.5%. Rental income is taxed at 19% to 47% for residents, and at 19% flat for non-European Union foreigners. Inheritance tax ranges from 7.65 to 34%, depending on the region and how much is inherited. Now that we looked at all these countries, one thing becomes very clear. The system tax in the US, Canada, Germany, the UK, Turkey, and Spain are way more complex and costly for property investors. They often involve many different taxes on profits, rents, inheritance, yearly ownership, and property transfers. Dubai, on the other hand, keeps things simple, with no capital gains tax, no rental income tax in most cases, no inheritance tax, no annual property tax, and just a single 4% transfer fee. Dubai offers one of the most straightforward and investor-friendly real estate markets in the world. I hope this has helped you better understand how real estate taxes compare around the world. Thank you for watching this video and for your comments, likes, and shares. Until next time.